I like to look at what I call two inflection points. The first inflection point is that realization that I'm not going to own this asset forever. This is not just going to be the cash cow of the family. The second inflection point is I'm going to meet the market. In a good market, you have the chance to sell at the first inflection point, whether it's off market or with an aggressive listing. In today's market, you need that second inflection point that now is just the right time. Really, it all comes down to your staying power. I think everyone says real estate, location, location, location. But when you look at an investment, staying power is the name of the game.
All right. The Broker Brunch, episode number 14, number one real estate podcast in New York. Rob Sharfstein is here on Friday in August. Mitch Flaherty, Britain in the Bronx. Thanks for coming on. Appreciate your time. Myself, Brian Whelan.
Glad to be here, braving the 115 degree weather at 9 in the morning on August.
Brutal. Why don't you, for the audience, just tell us a bit about yourself and your background, Rob?
So, I run a firm called RPS Capital Management. We are essentially an outsourced family office. Our bread and butter is managing the 1031 exchange process for investors. But we also have asset management capabilities as well. I got my start in the business working in-house for a large New York family office. They owned a ton of multifamily and office product in Manhattan as well as Connecticut. I was brought in and they came into a bunch of liquidity. And while I was there, built out a hospitality arm where we did about $250 million in hotel acquisitions, the trophy asset being the Garden City Hotel out in Long Island. And I also built out an asset management vertical for the family.
Wow, great answer.
You've done that before.
I have.
So you do a bit of asset management at RPS as well, right? You remember you saying you do some of that.
Yeah, this is something that kind of just happened organically, that we would place clients into their exchange properties. And I should kind of say that RPS Capital Management only does the buy side when it comes to transactions. Only buy side, only 1031 exchange, only under exclusive, and asset class agnostic. The asset management arm kind of was born helping a client who had bought a property on the island for about $1 million. He was in the jewelry business and he was going to build out a factory. But after he closed and before he started construction, he got an opportunity to rent a fully built out space at a good number. So he was sitting there with this empty building, wasn't great real estate. The tenants that he had and a gym and a childcare concept required a big TI number. He wasn't comfortable with credit. What we were able to do though was build out the gym, give the big work letter by taking out a mortgage. We then flipped that property and put him into a Wendy's down in Margate, Florida. Which he sold in 2022 for the profits. So net, he made about $2 million on those two trades.
Nice.
So is that typically how your business works? There would be a property that's being sold, a broker's on it. At what point why don't you talk us through like the exact life cycle of one of your deals from cradle to grave?
Yeah. So typically we are introduced to the client anywhere from the broker's going on his initial pitch and wants to explain the full life cycle of selling and replacing and avoiding a tax to working with a group that will hopefully be signed up over the weekend. They're closing their down leg today. I try to start working with people when they sign their contract to sell their property, just in terms of educating, coming up with a business plan, focusing on asset classes, focusing on geographies, really zeroing in on what the target is from a cash flow perspective. We can start aggressively putting out offers about 45 days before they close their down leg. If we do everything in a timely fashion, which doesn't always happen, we're in position to sign the contract a few days after they close their down leg. We're through due diligence before the 45 days comes up. And we get the deal closed, ideally 6 weeks after the 45-day idling them. Having said that, we'll get calls. We got a week left to go, 10 days left to go. We're scrambling, and we're able to help those clients out as well.
So in that 45-day ID period, right? So they sell their property. What happens during that 45-day ID? What are you doing out there?
really we're scouring the market to find opportunities that fit the investment criteria. You can say that there's a lot of net lease property out there and it should be easy, but we really try to take a big marketplace and make it smaller. If you're based on the East Coast, it doesn't make sense to buy something on the West Coast for a few more basis points. What happens if that property goes dark? On the asset management side right now, we're working with a client. We did not manage their exchange, but they had a large exchange about 10 years ago. And on the back end, they decided to buy a $3 million Burger King in North Dakota with a franchise guarantee. They picked up 50 to 75 basis points to a comparable deal on the East Coast. They now have an empty QSR in North Dakota. They live in Florida and are retired. It's more of a headache than anything else. So why put yourself in that position when net after taxes, you're going to make an extra $500 a month?
So you're doing 1031 exchanges. Is there anything in the upcoming tax code with Biden or Trump, or Kamala Harris, that could change timing or anything like that?
Well, back in 21, when Biden made his tax proposals, 1031 was thrown in as a revenue generator.
Yeah.
It was not picked up by the House or the Senate when they drafted their proposals. The Senate Finance Committee put out a menu of options of revenue raisers that they thought could get approved. The House then drafted a bill. That bill was then watered down to the Joe Manchin bill in 2022. So we know the White House, the Biden White House, has no problem including 1031 exchange as a proposal. They even brought it out last year as a spending cut when they were trying to get something passed through.
Yeah.
So
it sounds unlikely there's going to be changes than this current fall.
Well, in 2024, and we can assume then 2025, we know there's going to be a tax bill. The Trump tax cuts start to expire. If the Trump tax cuts expire, everyone's taxes go up. So there will be some form of a tax bill. Will it be 2017 style where one side controls the House, the Senate, and the White House, and it becomes either a big spending bill or a big tax cut bill? Or will it be 2010, 2012, the fiscal cliff Obama with a Republican House and Senate, where you have tax cuts preserved for lower income, but mostly status quo across the board? We haven't seen any Kamala Harris proposals, but you would assume that a lot of the Biden people who were Obama people will remain in place if she does back.
So you would agnostic then to politics in terms of who's better for your business or who's not?
Well, it's an interesting question. I went to Washington last year with the Exchange Accommodators, the QI organization, and did Day on the Hill. And
QI is the qualified intermediaries, right?
Correct.
So they hold the money that is going to be placed.
Correct. They like to call themselves the facilitators of the 1031 exchange. And their lobbying group did a Day on the Hill. They do it every year. And in meeting with, I think we met with the staff of 6 representatives in my group. The more senior groups were actually meeting with leadership. Leadership is 50% controlled right now by New York representatives. In fact, the Democratic Party, the House leader and the Senate leader are called to New York with Schumer and Hakeem Jeffries. And the general sentiment we got was 1031's not gaining traction in the House or the Senate. And actually, there's more at risk under Trump in 2017 when they closed off 1031 exchange for anything but real estate. So you used to be able to do it with machinery or artwork. That was eliminated from the tax code as a pay-for bonus depreciation in 2017.
Got it. More in politics?
Try and stay political in this podcast.
That's probably a good idea.
Sorry?
That's probably a good idea.
Yeah.
It's you can't win, can you?
But policy does obviously have a huge impact on our business, particularly on the regulation side.
It does, but I think if you look back on it, most successful people were successful under Biden, successful.
Yeah, I agree with that.
In Bush. So, you see what's in front of you, and you play your hand as best as you can.
Yeah, I couldn't agree more. It's so frustrating when you hear, we're just waiting to hear what happens with the election, or that's not a real reason why you're not playing a multifamily building in New York City. It's I think if you're a buyer, as you said with President Biden, you're a buyer with President Trump, and you're going to execute your business plan and work within the rules that are given to you. It's not like you're just waiting for one specific set of events. I think it's just a smoke screen reason.
Also, if there's a change in political party, then there's change in regulation or rules. That gives you an opportunity to zig when other people are zagging. Particularly if you can sort of have a vision or see what might happen. Like, for example, say someone bought Red said I was building Bronx right now for 70,000 a door. Then when the policy changed later down the line, the values went up. That creates opportunity because the values went up for a certain different reason, which is kind of interesting to observe.
And ultimately it all comes down to your staying power. I think everyone says real estate, location, location, location. But when you look at an investment, staying power is the name of the game. If you can wait and be patient, especially in the New York tri-state area, the market's going to make you look smart. If a lender forces your hand at the wrong time, that's when you can get yourself into trouble.
Also, a lot of your clients, they're not really transactional. Like you're doing one-off transactions with them. So
True.
That's correct. So the avatar is really someone who's owns one or two buildings. It's been in the family for 50, 100 years. This is our third generation taking over. And for whatever reason, they start realizing that they don't want to own this asset forever. It might be the next generation doesn't want to take on the management. It might be infighting within the family and people want to go their separate ways. It might be that the asset's starting to cause headaches, or that the asset's more valuable as a development site. So that's who the client is, and whether or not they transact, I like to look at what I call 2 inflection points. The first inflection point is that realization that I'm not going to own this asset forever, right? This is not just going to be the cash cow of the family. The second inflection point is I'm going to meet the market. In a good market, you have the chance to sell at the first inflection point, whether it's off market or with an aggressive listing. In today's market, you need that second inflection point that now is just the right time, either in my life cycle, in the partnership's life cycle, or in the property's life cycle, that we need to transact.
It strikes me that you'd be an unbelievable resource for a sales broker, right? Think, Mitch, how many deals we're trying to sell, and it could be a mom and pop owner.
Yeah.
And one of the main objections to selling is what do I do with the money?
Yeah.
Right. So it's having Rob come in at that point where you're still very much strategizing on next steps, trying to figure out what happens post sale. That's really when you should be inserted.
Yeah, I like to tell sales brokers that we're an extension of your team. We're an independent shop. We have no listings. We're not a competitor. We're an ally. And we're here to help you with your clients, to be a sounding board. You're running a sale process. You have to give them the real-time market information. You didn't get them the 50% above market offer they're expecting. They can come and vent to me. And then I can kind of talk them down of, right, you can still transact. Even if you're getting beat up on your sale today, you're making it back on the buy. And I'll give you a couple of examples of that. So we're in contract right now for Chick-fil-A in Plantation, Florida. Very, very prime market, Southeast Florida, probably the most desirable MSA for net lease property right now. We're at a 4.5 cap.
Wow.
2 years ago, that deal's a 3.5 cap. So in absolute dollars, you're talking a $2.1 million difference in the purchase price, or a 22% discount to where the market was 24 months ago. On top of that, we had about 7 assets that were somewhat similar in Southeast Florida, whether Chick-fil-A's, Raising Cane's, bank deals to choose from. So we could really play it out. We had time, whereas when the market was on fire, come in at full asking price with a hard deposit, no due diligence, and maybe you have a chance to win the deal. So as a buyer, you're in a much better position today than you were 2 years ago. And the buying power, even at a lower sale price, you're in the same position. Another example of that is last year we closed a deal in the West Village. We were taking a family out of a development site on the Upper East Side and putting them into a core asset. That deal was a 27% discount from when it last traded in 2016, about $4 million discount on the price. And that deal only happened because we had time. I needed time to educate everyone in the family on what the new deal was, what the opportunity was, and also to work through the family dynamics of getting everyone to agree on what the purchase was. I don't have 120 days in 2016 to buy a prime West Coast property. I had it in 2023.
It's a great point. Yeah.
Some people which want to pay the tax as well, like we spoke about the family in the Bronx that was selling the industrial piece for. You just presenting options to them, make them realise that they're shouldn't pay taxes, because not everyone wants to be a landlord or an owner of property. So I think you coming in and giving that angle helps them clarify their thoughts in their head that they want to do.
Yeah, and sometimes paying the taxes is the right decision.
Yeah.
Sometimes partially paying the taxes is the right decision. With where the market is today, a cash-out refi is hard to stomach. But past the liquidity, taking money out, getting out of real estate, partnership buyouts, these are all different options that we can present to someone besides just, here's your net lease deal in Anytown, USA. I mean, they're going to earn a 6 cap and it's going to be great, even though your tenant's Walgreens and they're paying 3 times the market rent, and 10 years later, you're lucky to get Dollar General for a third of the rent.
I got to imagine the more seasoned owners, long-term owners, trying to explain to them about net lease properties in Indiana or Washington, properties that they can't go by and kick the bricks on. Is that challenging to do?
So I typically start by trying to get an understanding of where the client has a connection to. One of the first deals I did was a new construction Wawa in Townsend, Maryland. And the buyer's daughter was a senior at the University of Townsend.
That makes sense.
So
There was a hook.
it was easy to get comfortable with, I'm buying this Wawa, which is down the block from where my daughter lives right now, as opposed to go to wherever USA. So that's why, even though I, in the net lease space, will transact nationally, most of what I do is in the Northeast and in Florida. When it comes to the management assets, it's really only New York tri-state area with a little bit of Florida right now. And that's because when you go into a management deal, you need to know what you're doing. You need to know who the people are that
On the ground. Yeah.
100%. And I think just in general with a 1031 exchange, if you chase yield, you can get yourself in a lot of trouble, especially if you chase yield for debt.
So the management arm, that's probably a nice selling point for you, right? Because it's, if someone really doesn't want to be hands-on at all and you're placing them into, say, a new property, do you offer that off the bat that we'll manage that for you as well?
We do. Currently, we're working on a blend and extend for a client who we put into a bank deal in Florida about 10 years ago. Their lease is coming due, so we're handling negotiating an extension with Bank of America. Also, we're working with a client just at a TD Bank up in the Boston area. They got notice that TD is going dark with 6 years left on the lease. So they've engaged us to kind of give them an education of what's out there, what's the right thing to do. Do you take a buyout and re-tenant it to sell it with the lease in place? Or do you take the buyout and then sell it vacant? So we're running that analysis for them. We'll put the right team in place for them. We'll make sure they have the right leasing broker, have the right construction manager. Basically, everything that a big landlord has in-house, we'll give it to these clients on an a la carte basis. We also sometimes get involved before the sale, and I'll give an example. A property in Roslyn that I've been working with this family since COVID, working on rent discounts and lease extensions. We took it out to market with Ripco in 22. One of those just pie in the sky, first inflection point, education type of experiences with the client. As we were getting ready to put this thing back onto the market late last year, we lost one of the anchor tenants. Perfect timing. And over the last year, I've been working with them on repositioning the property, chopping up some space, getting some new tenants in place. Knock wood, we'll get this thing on the market again in September. And now that ownership has gone through the process of seeing what the market really is and the inconvenience of and cost of losing an anchor tenant, they're probably at a point right now, including with some other changes in their lives, that it's time to meet the market and go into something that's closer to home in Florida.
Nice. What banks typically lend on these cash flowing assets? I don't know if you get involved that much. I'm not side so much.
So I always outsource things to a mortgage broker, and I think it's very important that you hire the right mortgage broker. The guy who's doing $10, $20, $50 million trophy New York deals, is not going to do the best job of getting you the debt you need for your $2 million Dollar General in Rankin, Illinois, or Bloomington, Indiana.
Who do you go to for that?
So I typically work with Andrew Marcus. He used to be over at Dasher Group.
Yeah.
And went over to Matthews.
Yeah.
But I'll also sometimes work with more local guys who are based in the Midwest or based in these markets, because it's these deals are credit unions, local banks, getting you to the leverage points you need. And it's just a very specialized game. It comes back to just knowing what you do well. And if it's something you don't do well, get it to someone who can deliver for the client, deliver for the referral source, because everyone wins if there's a great execution.
Sure, you collect a referral fee from Andrew Marcus, right? New business he gets off the back of this episode. Before we came on air, we were chatting, and you think about, outside of the 1031 side of it, just networking and business in general, you think about it uniquely. I think you've got a really good perspective on things. You mentioned something about being able to park your ego, being able to see the big picture, right? And you see it more as, brokers are basically your clients, right? So, and I know you've great relationships here at Ripco, and you've probably good relationships across the city, I'm sure. How do you foster that in terms of, rather than going straight for owners or buyers, what's the best way to foster these relationships with brokers who are naturally competitors of each other? And how do you say friendly with everybody?
Well, I think the main thing is I'm not a competitor to a broker, right? I'm not selling buildings in the Bronx or Queens or Manhattan. I'm just representing mom and pop clients and helping them with their real estate assets. I look, like you said, the brokers are any referral source, but in this sense, brokers are my clients, and the referral fees are investing in the business. So I want to work on a structure where it works for all of us. There's no fixed referral fee. It's a conversation. I let the brokers, whoever refers it, let me know what you think is fair. If I think it's fair, no argument. If it's too aggressive, which I've actually never had, we'll talk about it. I have had where the brokers asked for too little, and I gave them something that I felt was a little more fair. So,
less than a broker in this world.
But look, at the end of the day, we're relatively young in this business. I started on the principal side and switched over to brokerage.
Yeah, that's an unusual, right? Because you gave up security, which usually people get tapped out of brokerage and go the other way.
That, and also, I think what you learn being 5, 7, 10 years into brokerage is there's a big difference between running a deal and running a brokerage business. And when you're on the principal side working for an established New York family, people call you. They want to meet you. They want to talk to you. Even though your firm's probably going to lowball them at best, you're, their gatekeeper to a big family. For us, when I was working the acquisitions desk, we would only look at deals in New York, apartment deals. And this was 2015-16, which was the peak of the market. We would only look and write on deals that were in close proximity to something that we owned, and the existing super could just stick it up because we get some management efficiencies. Other than that, they weren't going to be buyers. And that's why we went the hotel route. Did a couple of partnerships with Fortuna, some ground-up development, bought a trophy property.
Is that Moynihan?
What was one?
Yeah.
Nico Moynihan is Fortuna. So
That's Jonathan, right?
Jonathan and Nico are Morris's sons. Morris runs that arm of the business.
Nice. Shout out to Moynihan's. So with somebody like, say, networking groups, right? I know you're a big fan of Bob Knuckle. And you see how Bob networks. Is that something you try to emulate when you choose what events to go to or how to conduct yourself out there?
Well, it's a little different with me and Bob. When Bob walks into a room, people kind of flock to him.
They did that with you as well.
No, not maybe they flock away from me, but it's a little different.
Still flocking.
Just the wrong direction. But I'm very involved in the Jewish organizations, UJA, JNF, AFN.
You need to find your like what you said about an owner looking for a hook into an area, like his daughter went to school in Maryland. So you need to find, I think, what speaks to you. Yeah, I know you do that a bit, Mitch, right? With how you select network revenue.
Revenue to our dog
loves revenue. But whether you're an immigrant or whether you're Jewish or whether you're into, golf, like find the group that it's going to be easiest, I think, to keep going to. Because like even going to ICSE, right? A guy was telling me, it's a big check to go to ICSE, right? The hotel, the flights, the event, everything. But he's like, don't look at it like, do you just want to go to this one event? But what's the events you want to be at in 10 years' time? And then it seems like less of an investment today, right? Obviously, you're going to pay a bit of money, but these are people and folks and places that I want to still be connected with in 10 and 20 years. And I think when you think of whether it's ICSC or any big ticket networking events like that, that's the correct way, I think, to look at networking. At least I thought it was, because it just makes it more palatable to invest today when you're thinking about it from a wider lens.
Yeah, and I think just expanding on that, the value is being in a group, constantly seeing that group, building a personalized relationship. So when there's something that fits what you do, they think of you and they call you.
Yes.
It's unlikely that you're going to walk into an event, meet someone, they're going to give you a referral and turn it into business.
Exactly. I think that's where we trip up when we think about networking. At least I do. It's like you're thinking about it too much in terms of like what's the immediate return you can get.
Yeah.
Whereas no one likes to be talking to someone at a networking event who just wants their business card and wants to go on to the next person. It's more of, can you create an organic relationship with them? You're definitely doing that, because any networking event I walk into, and I haven't been to much this year, but you're there. So you're definitely on it.
Yeah, and that's just part of us being young in our careers. For me, I don't have kids, or at least kids that I know about. So, so that allows me to go out and take more reps of getting to 50, 60 networking events a year. Even if they're not all high-quality events, getting those reps in. Sometimes just going to you got nothing else going on and there's a lower budget event with a bunch of younger people, just go in there and build up your confidence of networking. I try personally to stay in the price point of, call it $100 to $300 a ticket. And I think that for guys with 7 to 10 years of experience, you have a good room of peers who are, rising in their career, and they value being there. They're not just there to have a few drinks and kill some time and say they went.
That's a great point.
And when you go to the higher price point events, you're dealing with people who are 20, 30 years older than you. They have their people. Yeah. So while it might be nice to go up to some big hitter,
some
Moynihan, is that going to turn into business? Whereas if you meet guys who are on your level building their careers, they might not have a piece of business worth being able to control that business for another 2, 3, 5 years, but they have a run coming where they can control a lot of business. It's going to be their guy.
I've never regretted going to a networking event. I think you always pick up something, even if it's one little thing that you picked up from someone that's worth going, in my opinion.
You're doing a really good job at getting out there. I feel like even if you don't feel like going out and
all the time,
doing the events, getting out the events.
Yeah.
You think of it almost like your calls or your
and like
your pitching. Really,
it goes back to the ego thing as well. Like I think, not necessarily an ego thing. Like I don't need to go to this event, but just park that aside and just go. You never know. Like I see you a bunch of them. It's one other thing that's worth the time, I think.
Do you have a strategy when you walk into a room of how you're going to, spend the next hour?
I'm naturally curious about people, and so to ask those questions about the individual, and people like talking about themselves. So that's my strategy, to ask the questions about who they are, what they like to do, business. Yeah, that's my strategy.
Great.
Now, it also helps when you go with someone to an event.
Yeah, that's true.
By yourself. Like Mitch and I, have an email chain where we share whatever events we're going to, and we can kind of play off each other.
Exactly.
Together, start a conversation, come back. So it's not really an art. You just kind of go in and you do it. I'm not the most comfortable in those situations, but the more you do it, the easier it gets.
Yeah, you're always afraid of being the one guy that's just doing laps of the rooms. Because once you do one lap, if you do the second lap very quickly after that, just kind of on his own here.
And trust me, I've been there.
Yeah, we all have. Yeah, we all have. Any other topics? So we hit the big ticket items, right? We hit the 1031 business. I think it's helpful to understand. At least I find it helpful to understand how you operate. What's a good referral for you? What the life cycle of the deal is for you, and just to hear how you think about networking. I know it's tough. You're out there, right? You're growing your business. You're a young guy, so you're up against it, right? I mean, everything is probably a grind right now, and it's great to see you making the progress and riding the wave.
The 10-year treasury just came down as well, and your business is driven a lot by interest rates. Well, all our business really, but particularly 10-day one business. So hopefully there's a lot of business coming your way.
I would say in a way, yes, and in a way, no. I think what you're seeing right now in the marketplace is sales volumes obviously down, but also most of the sales are driven by refinances and lenders forcing people's hands. So if you're ending up in a position where you had, call it 50, 60% loan to value on your property, but now when you sell with induced prices, less your closing costs, that is 70% loan to value, it's very, very challenging. And we have creative strategies, utilizing things in the tax code like cost segregation strategies, and looking across portfolios to see if you have paper bosses that may take mortgage boot. But yeah, it's a grind out there. But it's a time that you just double down on working on your business, or investing in marketing efforts and your networking efforts, writing those checks, getting those reps in to position yourself for the next cycle.
Love it.
Good closing. I like that.
Yeah, love it.
Thanks for your time.
I'd love to have you back in after the election and see how business is then. But it's been a pleasure. Thanks, Rob.
Thanks, Rob.
You guys for having me.